Okay, hi everyone. Hopefully everyone has started joining. My name is Sophie Hall and I am Sector and Communities Manager at ACCA. So welcome to our second session of our Ignite series. We had one this morning. This session's on resilience in a dynamic environment. This webinar series has kindly been sponsored by our partners Pure Cyber, who we'll be hearing from later in the cyber risk breakout session. So the aim of these webinars is to really explore the key issues impacting the profession and give you the opportunity to learn from experts, as well as connect with the ACCA member community. So before we get started, I'd just like to draw your attention to the housekeeping on the screen, which should be there now. So as we have a large audience today, microphones have been muted just for this part of the webinar. However, we would like to encourage you to interact just by making use of the chat function, so you can comment on discussion and connect with each other in there. And there will also be time for questions. So if you have anything that you'd like to put to the panel, you can submit these via the Q&A function, which hopefully you will see the little icon just along the top of the screen. So on to this afternoon's session, we will be exploring the role finance professionals can play in helping organisations develop appropriate culture around managing risk. And this follows our recent risk culture report, which my colleague Rachel Johnson is author of, and Rachel will be chairing the session today. Rachel, can I pass over to you?
Yep. Okay. Hello, everyone. Thank you, Sophie, and to your team for organizing another really interesting session for us to showcase our research on risk, which is on the tip of our tongues all over the world at the moment. I'm really excited to have a stellar, real lady power panel today, particularly since I know a few of them very well. So thank you for joining us. I'm really delighted to introduce Claire Jenkins, who's going to join the panel today. She's a forensic accountant at Companies House and has helped us with the Rethinking Risk, which was from a couple years ago, and which is what we sort of done a deeper dive and built on with the Risk Culture Report. Secondly, I'm delighted to welcome Jane Waldy, who's Senior Risk Management Consultant of the Holistic Risk Practice, among other things, because she's also a member of the special interest group that we put together for the Risk Culture Project, as well as a member of our Global Forum for Governance, Risk and Performance, which also was largely involved in the project and ongoing in our all of our other content and assets that's overarching campaign on this, including podcasts and webinars in different markets around the world. And last but not least, we have Dawn Scaffield, who's the Chief Finance Officer from Mid and South Essex NHS Foundation Trust, to really help round out our discussion and help us talk about some of our calls to action that we put together for the Risk Culture Project, which was included the one number 10 that is on trying to promote more multi-stakeholder engagement. So as a profession, trying to look at the different industries and how we can try to convene more conversations with regulators, standard setters, and the practitioners and other professions to help us lead to more positive pro-society outcomes. So I'm just going to check my screen. We're all ready to go. So I guess let's just get going on our discussion, ladies. Jane, I was going to start with you. We've talked a lot just about how business models are shifting so fast with all the exponential change and disruption that we're experiencing. And all of the input that you kindly gave us for the report and our projects around it. You know very well that one of the main messages was that the governance in ESG is lagging, and so it would really great to get your thoughts for this audience on how organizations can get the G up to speed, especially today when we're all talking about artificial intelligence and how the adoptions of AI are rising up the agenda and putting more pressure on organizations to put more resources and energy into better governance and risk taking.
Yes, well, thanks, Rachel. It's a great question, and just to try and unpack that a bit, I think there was also a question around how business models are going to be changing perhaps more frequently as we look at our environmental and social impacts. So how do we change what we're doing in order to address what we want to impact in our external environments and our social space? And so that has a bearing on how we actually then deliver our business. So we might have changing supply chains, or we might be changing what we're actually delivering as a service or a product. Now, the thing about that is that when you're changing your business model, you also then need to look at how your governance is changing around that, because it could be that your company structure is changing in order to deliver a new business model. So really the checks that need to happen to keep up to speed with that is, have you got the right structures in place to make sure that the right information is flowing up and down your organization in order to have that governance in place? Because governance is all about having the right insight into the risks that you're taking, so that you can then apply that oversight and that decision, and that those decisions are made at the right level of the company. So if your business model is changing, your governance structure might be changing, but also your processes might be changing. You might have whole new areas of risk to look at. And of course, we know that risk is both threat and opportunity. So this is actually a really good thing. It's quite an exciting space to be in. Now, as you're saying about AI, really, again, it's kind of taking it back to those fundamental principles of risk management, because AI is now in the context for us all. But depending on what your organization does, it's obviously going to be more or less impactful. You know, you might not be doing anything with AI at the moment. It could be an emerging risk, perhaps for part of your workforce, in which case that's the way you need to sort of make sure that you're picking up AI within your ERM, enterprise risk management process. But if you're already using AI, one of the fundamental problems with it is that the developers are telling us, and I'm no expert, but the developers are telling us that they don't necessarily understand how the AI is going off and doing what it's doing. So that gives you a fundamental problem with insight, because if the developer can't tell you what it's doing, who can? So there are sort of a couple of ways of thinking about that that may be helpful. One is, what's the AI actually doing? What's it changing in the world? And are you happy with that? If you're sitting on a board or you're making a business decision about it, are you happy with what your AI is doing? And then one of the fundamental questions as well is, how can I control it? Do I have the ability to modify what it's doing if I don't like it? And what are the parameters that I might need to set around that? And ultimately, do I have the ability to pull the switch? Because as we know, pulling the switch is never quite that simple, because if it's doing something, you're going to need to replace it for something else. So you're going to need to do that business impact assessment. What happens if we do need to switch it off? So those were some thoughts around it. And then the other thought, the last thought I had around it, was that actually, if people can't understand what the AI is doing, are we then going to be leaning into a space where auditors will be using AI to audit AI so that we can understand what it's doing? So if the machine understands what it's doing, perhaps it can tell us. But again, that's just going to give us the insight. It won't necessarily allow us to apply those controls that we need to make decisions and have that you know, it might help us with our oversight, but fundamentally, what are the controls that we actually have if we don't like what it's doing?
Yeah, really well put.
No,
Jane, as always, and I'm thinking a lot about some of your points too, which I hope everyone in the audience, if you haven't, please go to our page to read the report. And one of the aspects of a strong risk culture that Jane had brought up in some of our discussions was critical thinking, and how key that is to getting the governance right for the new world that we're living in. And like you say, look beyond the limits of our knowledge. I mean, critical thinking is about, what do we know? What don't we know? And I think it was you, or maybe it was Roger, who mentioned the Donald Rumsfeld famous phrase that we did end up putting in the report, if you remember, about the knowns and the unknowns. But
yes,
that really
yes.
is a characteristic of modern day risk management, isn't it? So thank you so much
Yes.
for that. Yeah, great. And okay, so Dawn, I'd like to move to you next and ask you, what you think have been the key risk priorities from your perspective in the public sector, and how you do you see boards changing or not always changing in getting more comprehensive structured plans of action to deal with the risks we face today. And I know we've talked about the rising fraud, which is only being exacerbated by AI and all these accelerated digital transformations. And you also mentioned before the importance of clearly defining, articulating, and communicating risk appetite, which we point out in the report too is in fact a big section on that. So it would be great to hear your thoughts.
Lovely, thanks Rachel, and thanks for inviting me to be part of the panel. I think it's really interesting because I think a lot of the recommendations that you've put in the report really resonate with the public sector way of managing and defining proactively risk. Certainly that clarity around the authority is so crucial because it's actually part of our everyday business in terms of managing risk. And obviously financial risk is a challenge within the public sector. I'm sure you can all identify being, patients or having colleagues perhaps waiting for care and treatment. It's absolutely that demand and capacity. So a lot of our risks that are on our risk register are fundamentally about how we can resource the demand and deliver care. I guess just like other organisations, we have a board assurance framework which sets out what the risks are for us meeting our strategic intent. And in that process, it won't surprise colleagues, no doubt, to know that financial sustainability in the public sector is one of our top strategic risks, followed by availability of capital, because that's obviously another area where we need to provide the capacity, and that relies on often, huge investment in technology and obviously modern day equipment. One of the other big strategic risks that we've got on our risk register, our strategic risk register, is around cyber security. Fundamentally, the amount of technology that we use and rely on every single day has a massive impact. I'm sure people will recall the attack a few years ago now, the WannaCry attack that caused a lot of NHS organisations to be impacted, business continuity, the ability for patient bookings and appointments and so on. So they're all things that through our board assurance framework we review on a regular basis. And the appetite point that you flagged there, Rachel, is something that we reflect on an annual basis. Obviously, it's another recommendation you've included in the report is about that multidisciplinary approach. You can't just have groups of particular colleagues just from one area focusing on what the risks are, because it's so multifaceted what could impact the risk in terms of sustainability or cyber or so on. So each year we reflect on our risk appetite, and it was really interesting with our board. I discussed the financial risk appetite that we had as a board, and in reality we're overspending as an NHS organisation, which is not where we want to be, but it's a fine balance between that and delivering the capacity and the safety and the care that we need to. However, when I switched the language and discussed with colleagues about what the risk appetite was for acceptance and tolerance of waste, then actually it was zero tolerance in terms of the acceptability of waste is something that we shouldn't be agreeing to. So therefore, from an efficiency point of view, is a different language that you can have in terms of them managing risk. So that's really important, and something that I'd encourage if colleagues on the call are not familiar with your organisational risk appetite, it's something that should be done on a regular basis, and that as an organisation it should link and reflect back to the strategic direction of travel. It doesn't matter whether it's a public sector organisation or in the commercial sector. Obviously, finance constraints are different. In a public sector, we're not an income generating growth, not a growth mindset in that regard, but obviously our risk is about managing resources to maximise the care we can offer our population. So slightly different lens, but ultimately the same kind of challenge that we're trying to address, which is mitigating risk to deliver our strategic intent.
Oh, thank you again. Very well put. And I appreciate you touching on some of the other findings. We have such a short, under an hour to really encompass all of them, but we did find that risk, unsurprisingly, is in a vacuum at the top. And so a lot of our tips from the risk culture special interest group and in our calls to action are about getting risk into the conversations, and our role as a profession in ensuring that we're speaking a common language is really key as well. So thanks for that. So moving on to you, Claire. We've talked before about the rampant fraud, which is another area I've been engaging with members more as it continues to become out of control, basically. So we'd be grateful for your thoughts on how accountancy professionals and all their different roles can be doing more to change the course and understand how people and their stakeholders perceive these risks. And that's what we talk about in the report too, just about risk perception in today's world. And like we have agreed before, for even back to rethinking risk, the report that came out in 2021 is how do we modernize due diligence without promoting this tick the box way of doing things?
Thanks, Rachel. A lot to unpick there, if I'm honest. I think for me, it's one of these issues. Fraud is one of these issues that I don't think, in truth, we've really had a good grasp on for a very long time. To start off with something thoroughly controversial, unlike me, I don't actually think we've truly learned any lessons from the whole Enron scenario back in 2000. I really don't think we have. I think we had that. We had Sarbanes-Oxley come in. We patted ourselves on the back. We stuck a few people in jail. And we went, great, that's all sorted now, and we can get on with business as usual. And unfortunately, whilst we've sat and gone, everything's business as usual and it's great, the fraudsters have got the leap on us. And I don't wish to be the harbinger of doom on this, but I do feel that they have been working on honing their craft a lot more than, dare I say it, accountants and those who should be interested in identifying this risk and sorting this risk and dealing with this risk have been, which worries me greatly, if I'm truthful, because for me, one of the key things is that as accountants, we need to be questioning everything. And I worry that sometimes the pressure on accountants further down the chain of command is such, and we've seen a bit of this in some of the reports coming out about Carillion, that there was a lot of pressure going downwards. And so the people lower down the rungs felt very ill at ease with what they were doing, but they didn't feel they could actually say anything. And they were fearful that if they did say something, they'd lose their job. So on that side of things, I think we've got a serious issue surrounding audit not asking the right questions. And I do worry that that's slightly turned into a tick box exercise, especially surrounding fraud. But then conversely to that, and I'm conscious we've only got a set amount of time, as you've said, so I could go into far greater depth. But I think conversely to that, what we've got is we've got a lot of companies who in turn don't actually ask those questions. So they might turn around and go, this customer is a slow payer, or they're not paying me. And instead of going, hang on a minute, and dare I said, instead of the financial controller or the accountant in that firm saying, hang on a minute, they do not get a bean more, they do not get another item because they have not paid, is just treated as oh, well, they've got difficulties, they'll get over it and then they'll pay. How many of those are genuinely having difficulties and will pay eventually? And how many are actually approaching that organisation with a view to not actually pay in the first place and just leg it with the goods? I don't think we can even measure at the moment. How much fraud do we actually write off as bad debt when it's actually intentional fraud? I don't think we can actually get a quantifiable amount on that. And this is the risk we've got, that when we've got these tick boxes, which, I mean, and don't we love a tick box as an accountant, but when we've got these sort of tick box exercises that are going on at the moment, saying, well, we've checked this and we've done that and we've done such and such, or even we've gone out and we've had the report from Equifax or Experian or any number of those. So that's it, we've done our due diligence. It's actually up to us to question more than that. Don't just rely on that small amount of due diligence. That has to be a continuing. That has to be, that has to continue on and on. It's not I've ticked the box and that's fine. So I think it is really looking at it and going, what are we doing to continue? We have to look at the whole risk and counter fraud scenario very much as a continuous process. And I think the thing I will say before I stop, because I'm conscious you want to get to the next question, the one thing I will say as well is what we need to keep in our minds is this: the majority of the fraud, again, controversial statement again, the majority of fraud that you will get as an organisation is not going to be internal by the people pinching the paper clips or diddling the expenses. It's going to be the people who are setting up companies to intentionally defraud you. So you've got to look outside. And at the moment, far too much of our fraud risk and our fraud appetite is insular, and it needs to be looking out.
Yeah, thank you, Claire. All really great food for thought, and I really look forward to working with you again more. I just put in paper that we did reference in the risk culture report that came out of the Journal of Accounting, or is it the Accounting Journal? Sorry, click it for yourself to see, but it's an interesting report that has received widespread coverage in New York Times and other international papers around the world, just to show exactly how serious and rampant it is. So thanks for that. And Jane, kind of moving on, I mean, I think how we deal with these hazards and opportunities, as you rightly described what risk is about, in many ways boils down to ethics and to what extent organizations are managing themselves responsibly, including how our profession can ensure the way products and services are delivered, how they are delivered, and are they in line with the company's statements. So could you share more of your thoughts on how this is or should be evolving organizations' approach to risk and how they incorporate this into their major decision making?
Okay, thank you. So yes, and it's really interesting, Claire's talking about tick box approach. And one of the things that the reports, the sort of overwhelming response was that we are mostly focused on compliance, which suggests a tick box culture, sadly. And in terms of a risk perspective, I mean, that's indicative of a very immature risk culture. And one where people feel that they can't raise those risks. So I will talk about known unknowns in a minute. so actually, when it comes to ethics, you've got companies at the moment saying a lot externally about their ethical stances, whether that's social or about climate change or their net zero targets. There's a lot of information out there. And I think the thinking I've done around this lately is that when you are in an organization where you know that your internal story is different to what you're saying externally, that should be a huge red flag. And that red flag is pointing at one of those elephants in the room or a known unknown or we also call it an unacknowledged risk. And some people call them grey rhinos. Now, the reason that they call them these horrible big beasts, not horrible, but, you know, dangerous big beasts, is because they are dangerous. Because when you're doing something different inside the organisation to what you're saying you're doing, just like Enron, it's fraudulent. So this is actually, it is rather sort of internal fraud. Now, the way to kind of combat that is to actually build that risk culture where people do feel comfortable to raise those risks. So you're openly inviting people to say, what are those unacknowledged risks? How might these impact you meeting your objectives? Because again, I think it was Claire and it might have been Dawn that said, you know, we do tend to be, it was Dawn, you said, we were talking about silos. So you may, as a team, find that there's a risk here that you're really concerned about that might mean that you can't meet your objectives, but actually you're not the person controlling it. So you don't feel empowered to raise that risk. So we need to rethink about how we escalate risks up the organisation, again, this governance piece, so that we can then have the right conversation at the right level of the company, including the board, to say, actually, are we comfortable with this level of risk? And that also leans into what Dawn was saying about risk appetite, because ultimately the board are responsible, or you know, if you're in the private sector, your governing body are responsible for the amount of risk they're taking. But I think that if they are having those risks escalated to them, they will then be having the appropriate conversations to decide whether that risk is actually within their risk appetite or not. But the other thing that I think is, again, that Dawn, you were talking about how, you know, you've got your financing on one side, but your safety and patient care on the other. And really, this is where you get an ethical value, which is in conflict with a financial aim. And boards really need to get comfortable, and risk leaders need to get comfortable with having these conversations of like, there is a conflict here. We need to acknowledge there's a conflict here. Okay, now which is more important? And now please align what you're saying externally with what you've decided internally, because otherwise it's misleading. And of course, that then has huge implications for corporate scandals and failures and so on. Yes, I think those are my thoughts on that. Rachel. Oh yes, so I think all risk leaders should be looking at reputational risk assessments. So they should be looking quite carefully about what companies, their organizations are saying externally, and then making sure that those internal conversations happen. And then once that board discussion takes place, obviously it's signed off. So then there is evidence there for the people who should have accountability. They've actually had that information in front of them and they have made the decision. And that, I think, will help to drive that. I hope that goes some way to answering your question.
No, it was answered beautifully, and actually really you helped me kind of link right next to what we want to ask Dawn. So this is perfect because when you talk about those having those right conversations, and in the assessments too, we found that what was it? I remember, you know, maybe a third had said they had conducted a risk maturity assessment in that financial year. Another third were planning to do so, but where we really found it was interesting is what were they doing with them. And so, you know, all these things that we do as whether we're as accountancy professionals, risk leader, or on the finance team, if we don't do anything with these and get them into the conversations, they just become academic exercises and are just, you know, again, up in that vacuum or parked over in another corner and not being used proactively and effectively to help organizations achieve all their goals, and that includes their sustainability ones.
Yes.
So
could I quickly add just to that as well, that finance professionals and risk professionals are in those advisory positions. So they're the glue, if you like, that often can make that cross-silo connection. So I think actually it's really on us to make sure that those conversations are getting across the radar of the right people at the right level of the organisation. So even if we don't own it on our little risk register, we need to get much more competent about this dashboard indicating, look, guys, this is the thing you need to be talking about.
Yeah, thanks for adding that on, Jane. And Dawn, I mean, you talked too about, applying across the different sectors, and what was really one of the best aspects of our research was that we were able to compare across sectors. I mean, unlike any other report out there, and in fact, we did have more responses, as Jane reminded me or pointed out to me on the day of the launch, than the World Economic Forum's Global Risks Report for 2023. And the fact that we are looking at different roles and hierarchies across different industries and all over the world really gives it a lot of authenticity. And again, just comparing between the private and public sector, where we as the profession can do more to connect and promote more multi-stakeholder engagement that leads to better outcomes. So Dawn, it would be really great from where your perspective at NHS to tell us more about what you would like to see policymakers and standard setters and professional bodies do to help progress change for the better.
Yeah, thanks, Rachel. So I'm going to share a really practical example drawing upon some strands that people have referenced so far. So one of the things that I observe, we've talked about fraud a little bit today, but in the example, a couple or so decades ago, the NHS was called out for having such significant fraud, and the behaviours and the waste, the public waste as a result of fraud. Now, obviously, in the public sector, it's less unlikely, I would suggest, that you'd have corporate fraud, but actually massive prevalence in terms of individual fraud, whether that's defrauding the NHS by use, or sadly, we have got examples and have had examples where employees within the NHS have caused fraud and quite significant loss. And I think one of the things about I think we can learn if we look back on that history, that risk was identified through a collection of through the professional bodies, through research and evidence, and then certainly in the public sector, in the NHS, what we've done is created a much more focused attention, so one of your recommendations, Rachel, around whistleblowing, so eliminating that fear factor. So we have created in the NHS a focus around an anti-fraud culture. We have identified awareness raising, which is about empowering people to identify. So it's not accountants, because the NHS is obviously much wider than just the accountants. And there is the opportunity to empower people to identify variations or anomalies that flag where there are potential fraud. And we have actually seen over the years an improvement in the identification, the detection, and the recovery from fraud. Sadly, is it perfect? Sadly, no, it's not. But what it is helping with is, certainly as society evolves, we've talked a little bit about AI today as well. We have a very practical example where we are experiencing technology frauds, where we've got supplier information that's coming through, detecting, so the use of AI, detecting suppliers tweaking information, change slightly, suggesting bank detail changes, which then is preying on the NHS to not pick that up and to identify, to make a payment to a different bank account. So that technology is impacting working practices, but because of some of the awareness and culture, people are picking that up. There are controls that are being put in place to manage that differently, so that it's being detected and prevented through some of that work that's been done. And I think what has made that successful, and I was listening to Claire about some of the learning from a private sector, or not, perhaps, as the case may be, and really it's about how do you create the framework at scale. So in the NHS, we have a local counter fraud service, it is mandatory. It is a requirement to have annual fraud assessments to consider what actions you're taking to create an anti-fraud culture, because this was an area that was massively prevalent on people's risk registers. But because of the actions that have been taken over the past few decades, that has improved. And of course, each case story that does come out raises the awareness a little bit more. So the piece about the custom and practice and, you know, the acceptance, so the culture, when you've got or had doctors potentially claiming for NHS time at the same time as undertaking private work, which clearly is an obvious no-no, but custom and practice in the past socially accepted that within the working arrangement, identifies actually that's not acceptable. Processes are put in place to manage that. So I think that's a really practical example of how kind of a wider profession understanding the consequences at scale and then putting in place something that is recognised, this is not acceptable for these reasons and this is a way to go about improving it, I think is something that we could do collectively. Obviously the motivations are different, potentially, you know, between private and public sector. There's a piece about how people perhaps feel that they're owed and what is the behind. So there was a piece of research that was done in the NHS, and actually for employee fraud, the prevalence of addiction behaviours, so addicts, whether that's gambling or other addictions, was about 30% of the reason why fraud was undertaken by those individuals. So there's something about getting underneath what the motivations are, but obviously for public sector, that may or may not be similar, or indeed the commercial kind of the corporate fraud attached to that might have different motivations. So I think there's some learning there, which, you know, might be some food for thought, Rachel.
That is really fascinating and I learned so much in the whole year working with the special interest group and engaging with members just about behavioral science, behavioral psychology, the psychology of risk, and it's something I want to keep going on for other reports and events and contents that we do for ACCA. I think it really, I'm sure Claire and Jane would agree, is really the root of why people do, how do we understand risk unless we understand why people do what they do in the environment they're in? And that, I like what you said, what motivates them, particularly when it goes to fraud, which moving on to Claire too. And we are on time. We don't break out till 2 o'clock, so we have enough time for a great ending for on Claire, and then for some questions for the panelists to field some questions from you, the audience. So Claire, to end the panel discussion before we do go on to the questions, I thought it was pertinent to ask you, where do you think accountancy professionals are right now in terms of building more resilience and detecting all these material, I guess, how do we group them? Operational risks, they're also interconnected, but certainly hard to measure. And we've discussed today how we can be informing strategy more and providing more of a story rather than just the numbers to the major decision makers. How do we move from being obsessed with putting numbers on everything to providing greater analysis, giving them worst case scenarios and our opinions of how to deal with them, but also, which I think all three panelists you've touched on, is explaining what the good ones are and how to facilitate them, and essentially how do we add value in that respect?
There's a lot to unpick in that. I think for me, let's start off with the first part, which is, what can we as accountants do? And I think what I'd say is this: we are, as accountants, I think it's fair to say that we're all quite engaged in things like, environmental reporting and social governance and all of these things which we can put some sense to. So we'll go, I want to do this to show that my organisation cares about the environment and we're doing X, Y, Z. And we rationalise that because we go, we're doing this because we want to do good by the earth and the people who live on it. Well, we need to take this viewpoint in relation to fraud and risk. And we need to be looking at it and going, in the same way as we go, I'm doing this so that I can save the planet. We need to be looking at risk and fraud and going, I'm doing this in order to keep this company going. We have to appreciate, I think we have to, as accountants, number one, we need to actually know our history on this. You know, to mention Enron again, you know, Macmillans, the recent case, oh gosh, the woman's name, Elizabeth Holmes, that. There's plenty of fraud instances. You look at it, Wirecard, Patisserie Valerie, you know, you could list them off. Look and understand what's happened there. Look and understand. Ah, thank you, Theranos. That's it. That's the bunny. You look at those. Look at them and understand what went wrong. You know, and understand that this could easily happen to where we work as well, because, you know, at the risk of sounding like the cracked record, it's normally the people. Yes, you have people inside the company committing fraud. Yes, you do. But very often it's also organised criminals to try and do over that company. And I think for me, to build that resilience and to build that knowledge, we need to build the knowledge, we need to build the understanding, we need to get a handle on what this means as a risk to the company. You know, that if we don't do the due diligence and we just go, it's a small person in the corner just trying to diddle a little bit and it'll be fine. We have to see this in the larger context, which is, you know, organised crime groups committing fraud on a massive scale to fund other stuff. And at that point, we can start to go, okay, we've got a picture of this and we can tackle it. But we have to look at it in the same mindset, and we have to approach it in the same mindset as we do with things that we can see the benefit, you know, we can see the tangible benefit, like I want to save the planet. We can all see the benefit of that. And I think because fraud and that risk can become so esoteric in some senses, we don't necessarily see the benefit of it, and then we run the risk of the tick box exercise. I mean, I loved some of the comments earlier, you know, about eliminating the fear and empowering people. Yes, yes, yes. This is what we need to do. We need to be empowering people to question. You know, I always say I'm a cynical what's it. It comes with the job. But you know, I'm quite cynical, and I look at stuff and I go, right, what is this telling me? And I think as accountants, and then I'll stop after this point. As accountants, we don't want to be bean counters. You know, we actually want to be analytical. We want to channel the questioning of what am I seeing in these figures? What do these figures tell me? You know, if that person is consistently not paying, what is that telling me? Could there be something greater at risk here than just someone who's got bad cash flow problems? And it's just that questioning and that empowerment that we need to have in ourselves to question. Anyone who's not dodgy won't be offended, and anyone who is, well, go figure. But you know, we have to, if we want to get the risk down, we need to take it seriously, understand it as the risk it is, to actually collapse businesses. You know, Carillion, say no more. And you know, and understand the risk we actually have if we don't take this seriously. So I'll stop on that point, but yeah, it is just really, for me, it's grasping that risk as what it actually appears to be, rather than seeing it as much smaller than it actually is.
Yeah, thank you so much, Claire. As always, really good food for thought, good notes to end on, and particularly highlighting other parts of our calls to action about making sure everyone owns the risk. And, that gets into trying to modernize your governance, which really starts with, clarifying roles and responsibilities, but also the difference between responsibilities and accountability. I think risk, whether you like it or not, or acknowledge it, or are talking about it in all the ways you just described, it is in an organization's DNA, and that could be a good or bad thing. So I'm going to, I think we did have a couple questions, but it looks like Jane and you guys have already addressed them, but let's have a look. We go around and maybe everyone give their last 2 cents about what we've all discussed today, since I know there was a lot to pick at in my big loaded questions. So
can I just jump in on Donna's question, because I haven't answered in the chat? And I mean, what I would say to Donna is this. I think, and I'm just going to pick up on the increase in times of economic pressure. I think fraud happens regardless of what state the economy is in, because the majority of the fraud that I certainly see is organised. And so it'll happen regardless of whether we've got economic downturn or economic upturn. But I think for me, if organizations do have like dedicated people to focus on not necessarily, the profit protection, but certainly to identify and run through these risks and make sure that there's something, there's a risk appetite in that company and it's being taken seriously, I think that's only a good thing. I think when you've got an organization that has a dedicated counter fraud team, it's wrong. You've got to make sure that that isn't then right, we got the team, so it's all great and dandy now. But conversely, I think it gives a really good message as long as they're empowered. It comes back to that empowerment thing again, doesn't it? That really, if you've got an empowered team to actually really make sure that everything that can be done is done, and the checks and balances are there, and questioning things and so on and so forth, I think it can be really beneficial to a company. I really do. And it gives that clear message to everyone in the company, which is we take it seriously, which is half the battle.
Yeah, thank you. That is true. And the whole idea about defining a risk appetite is that if you don't, then decision making just becomes reduced to personal judgments, which can be very dangerous, as we know, and given all the cases that are in the headlines every day. I know there's a few other questions, and there was one that really, Sophie, that struck my eye too, was global macro risk. We've talked about AI and all these other hypes, and there's just so much to talk about really, because everything's changing so fast. But the level of uncertainty and the global macro risks that organizations are facing today, public or private, are just as existential and could be connected with everything we're discussing. So great question for the panel. How can the finance profession support boards in detecting external macroeconomic risks to the organization? Jane, go for it.
Rachel, if I may. So those macroeconomic risks should be part of any risk assessment that you start. So you always start with, what are my objectives? What am I trying to achieve? And what is the context in which I'm working? So those macro economic or macro, whatever they are, they could be a pandemic, not necessarily financial, whatever it is, should be part of your contextual review, because that's either going to make it easier or more difficult for you to deliver those objectives. So that should always be part of your risk management process. And also, there was a wonderful comment in the chat about overwhelm. The accountants, the workload is so enormous. I know, I've been there, I feel your pain. What I would say of the risk management process I have had it referred to me so many times as actually corporate therapy, because it gives the team space to step back from that workload and say, okay, what are our risks? What do we need to do about them? What controls do we need to put in place? What actions can we take as a team? Or what do we need to escalate to say, actually, I can't achieve my objectives because I don't have enough resource. Or this is the control that might really, really solve a lot of the problems that we have, but we don't have time to put it in place. Next level management up or board, wherever it needs to go to. How are you going to support us in delivering our objectives? Because we can't do it, because we don't have enough resource. And this is the whole conversation that should be taking place. And when it takes place in those terms, then those decisions are getting made at the right levels of the company. And it is worth doing, take half a day, do a great risk workshop, and that will give you so much value, because you will understand which controls you want to put in place. You'll understand what you need to escalate in terms of conversation. You'll understand that you might be struggling with something internally. You might be dealing with one of those elephants, when you actually say, look, do you know this is happening here? And are you comfortable with it? Because I shouldn't be worrying about it. You should, because I actually don't have the authority to worry about this. So that helps with the overwhelm as well. Anyway, that's my setting the stand for risk management, enterprise risk management.
There's definitely thank you so much, all of you, for those contributions. And again, in the calls to action, we do address that overwhelming feeling, and how we had a great session in our monthly call with our heads of risks and CROs that we hold every, talking about exactly that, and just being overwhelmed, and how do you prioritize, how do you look to, where do you channel your energies and resources to essentially, you don't want to be in a tick box situation, but essentially if that's how you're going to address them in today's fast-paced environment. So they were talking about, for example, working much more closely with HR. And there's some great stories in the report about that. The risk conversation section, where we had this community platform and all the different roundtables and monthly sessions with different types of members, and what they really got off their chest because they were unanimous, and how they working cross-functionally really helped. I think all three of the panels have mentioned about getting that buy-in with the CEO and being able to have that authority to do more delegating. And of course, the whole section about how do you get everyone to own the risk. And as Jane says, with training, that's, I mean, I think it was one of the interviewees I talked to was a former Basel committee, and he said, Rachel, this report couldn't be better timing. It's training, 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 training. You can't come out with any kind of qualification and say, I understand how to manage and take on risk in today's world. It's something that you're constantly learning in within the organization. So we do see lots of lunch and learning sessions. In fact, we've had Jane do a scenario analysis workshop with her colleague. We're trying really hard to do as much as we can, and we appreciate your suggestions, or if you want to help with those, or have us present something to you during a lunch and learning for your organization, and that's how we're trying to support you better in that respect. So we have a couple more minutes. So is there a few more questions? Oh, Claire, do you want to chime in before it's time to go in the breakout room? On your last point there? Or Dawn?
Sorry, you just broke up a bit, Rach.
Okay. Do you want to chime in for the last couple minutes? I see you had a point there.
Yeah, I mean, to the person who said about how busy accountants are and overwhelmed by the workload and such, and I get that you can be very overwhelmed, I really do. But I do also think that accountants, I mean, part of our role is checks and balances, and part of our role is to be ethical. And so as ethical accountants, you know, do we really want to be turning a blind eye to something that, and I mean, I won't mince my words here, can actually result in a company folding? Because very often, you know, yes, it can be small fraud and it can be small beans, but just as much as it can be small beans, it can also be really, really substantial. I mean, I dealt with a company, they'd been defrauded. They actually got told they were good to give this credit. They thankfully only gave them £50,000 of credit, but they lost that 50 grand's worth of goods overnight, gone, whoop. Now, this is what we're looking at. If we don't, as accountants, we have a duty, and you know, and apologies if I get quite firm in this, but we have a duty as accountants to do the right thing and be ethical and make sure, to the best of our abilities, that those checks and balances are in place and we're doing everything we can. We're not fixers. We haven't got magic fairy wands. Lord only knows I wish I had one on occasions. But it's just so vital that we take this seriously, because there's plenty of people out there who won't. There's plenty of accountants with very small A's who aren't qualified, who won't. And I think when we say we're qualified, then that in turn means that we hold ourselves to a higher standard, and we make sure we get that management involvement, and we make sure that we get that onboarding of everybody who needs to be onboarded. You know, it's not us just shouting at the sky, it's everybody, but it's up to us to actually say, you know what, this is important. If you want this business to continue, this is important, because this could actually kill the business off. Two really bad frauds can just, that's your business, you know. So I think it's making sure we do everything we can, and conversely I think it's also making sure that we then get the people in the organization who make these decisions properly informed, so then they're on board. So then when we're saying, you know what, we have not got the ability to do this, we have not got enough staff, we need we need a team in counter fraud to do this stuff, or whatever it is, we've got that ear, and we've got that, you know, someone's just mentioned pipeline, you know, we've got that pipeline to make sure that these decisions are made and these things are put into place so that we can do the best we can do.
Yeah, thank you, Claire. And really thank you, Jessica, and everyone else who put such great thoughts and questions to the panelists in the chat room. Thank you, Jane, Claire, Dawn, and we'll go off into the break room shortly. We will continue all of this in the risk culture, and I'm sure in the cyber risk, and also we have more podcasts coming out. So please do stay tuned. There's one coming out later this week where we talk about accountants and foraging for the truth. So I'll end on that flowery note, and thank you so much for tuning in.